All right, Ron, we're ready to go. Jeez. All right. Hey, everybody. This is Jules Straker, local realtor in Tampa, Florida, and I handle real estate throughout the state of Florida, mainly in the parts of Tallahassee and Tampa. And I currently live in Tampa. I have on today the show. This show is called Living in Tampa. videos. So thank you for coming. And I have on my business partner and has really become a friend over the years, a close friend in real estate, Ron Byrom, who is with loanDepot. And I'll give you my quick elevator pitch on him. I myself have been in the business for about 19 years, and Ron has probably done half of my 500 transactions. That's how much we work together. But no, he's awesome guy. And I can tell you that you are only as good as the team you create. And from that standpoint, Ron is my strongest link on my team. And out of all the transactions that we've done, and we've done literally probably a couple of hundred transactions together, and none of them have failed. Now, part of this is because Ron's a math guy. The other part is because he's a Seminole. So for all you Seminole out there, we love you because Ron and I are both Seminoles. Um, and so, I don't know if we can afford to give you a Seminole discount, but we will certainly take care of you. Okay. But no, Ron is great. And considering out of Tallahassee, I mean, Ron is one of the tops in the country at what he does. I mean, literally, he ranks nationally, and you wouldn't think that coming out of Tallahassee. But Ron does, and one of the reasons why I love using Ron is because he does all the types of loan products. He's a renovation loan guy. He does VA, he does FHA, he does USDA construction, you name it, he can do it. And he's just very well versed. Now, I consider myself very good at knowing my loan products, the basics, and I think as a realtor you should, but that's not my forte. That's why I have Ron on today. And Ron, but when I have a question, I go to Ron. I mean, I trust him with all of my personal. I think Ron, what have we done together? Just personally. Personally, I think I've done what, about 2 million, $3 million in just real estate personal transactions.
I told you I write you into my business plan every year.
So yeah. So anyways, tell them a little bit about yourself and how many years you've been in the business.
Ron Byrom with loanDepot, and as far as titles, I'm actually the state manager of renovation lending over Florida, Georgia, and the Carolinas. And that's probably the thing I'm best known for is renovation lending. And I'm getting close to 1,000 renovation loans now that have closed. The last 2 years, I have been the #1 producer of renovation units nationally for loanDepot, and we are the biggest renovation lender nationally, so that's kind of a big deal. I tell folks if you're going to work with another loan officer in market that can do renovation, because we're not the only lender able to do them, invariably, if they have a question, they will pick up the phone and they will call someone to get answers to their questions, and they are calling me, but within their own company. They are going to the person that has those answers. And so the advantage that people have when they're working with me is they get to go straight to the answer person. So 2 years in a row, #1 for Reno, but probably even more proud than I am of that, Jules, is the fact that last year out of Tallahassee, Florida, we were the #2 producer of units for VA lending in the nation for loanDepot. And we don't have a military base here. That's just reputation. That's teaching about VA. That's always trying to encourage people to work more with veterans and take VA loans and try to defeat some of the myths that are out there. And I actually just found out like a month ago that we got our feedback back from our voice of the customer is what we call it, where people give us ratings on how well we took care of them. And not only were we number two of units, but I'm probably even more proud, we were number one in customer satisfaction results last year out of all of our VA loans. So we try to take really good care of our veterans.
That's awesome. That's awesome. Yeah, this particular meeting that we're talking about, or podcast, whatever you want to call it, is going to be strictly about VA loans. We will kind of do a series where we break out some of the other loan products. But yeah, this one we wanted to talk about VA loans in particular, and that's impressive that you're so well versed in the VA loans as well. Like I said, Ron can kind of do it all, so and he's good at it all, which is kind of rare. Um, but one of the reasons why I wanted to discuss VA is because I particularly have an affinity to it because I'm a Navy brat. So, and being a Navy brat, I really enjoy helping a lot of my military veterans. I've helped my dad several times. Um, and we'll kind of get into a little bit of the story of what I'm trying to do with him too, as well. But this is called VA loan home loans. And what they don't actually tell you, and a lot of things that are going to cost you thousands, or you're going to lose thousands. Why? Because you don't know the true benefit, the power, and the hidden secrets of the VA loan. And that's kind of what we want to get into today. Okay. So, as far as I look at the VA loan, I think it is a very powerful wealth building tool for veterans, for many different reasons. One of my favorite things is on the VA loan that you can actually get multifamily units on the VA loan, and a lot of people just really don't realize it, or they don't even know how to do it. Another thing is that, it's zero down. Okay. And of course, Ron can correct me on any of these things, that I make mistakes on, because that's what Ron's here for. That's what Ron is here for. But it's also zero down, meaning very little out of pocket. And the thing about it is, when you're looking at making a financial move, isn't it a lot easier to do it with less money? And even if you did have the money, it's better to take that money and use it somewhere else where it can be making more money grow for you, right? So those are a lot of the things that I really like about the VA product. Another thing that I like about the VA product is it's assumable. Okay. So, that's another little thing that we'll get into as well. But as far as the VA is concerned, are there any other things that you want to quickly mention, Ron, before I ask you
I mean,
questions?
the two biggest things that we always are going to mention is no money down and no monthly mortgage insurance. And monthly mortgage insurance, if you go conventional, you have to put 20% down to avoid monthly mortgage insurance. If you're going FHA, you are going to have monthly mortgage insurance. In fact, you will have it for the life of the loan unless you put at least 10% down. Just a quick example, and here's why it's so important that veterans are educated and understand that the VA is available to them, because it's sad how many veterans didn't realize. They thought it was going to expire, because in the early days of the VA, it expired. So as a lot of your older veterans still think, oh, it expired, I probably can't even use it anymore. Or one that I'll get is, I need to save it, because they think they can only use it one time, but on a FHA loan, on a let's say a $400,000 loan, your mortgage insurance that you would pay over the course of a year is going to be a couple $1,000s. So 5 years into owning a house with a FHA loan, just in the mortgage insurance premium, you're gonna spend over $10,000 that you would not have had to spend if you had just exercised your VA and used your VA. So tremendous savings. It helps in affordability. It's easier to qualify for. There's just all kinds of advantages. I always call it the gold standard of loans. But you mentioned something that it's zero down. A lot of times veterans, not only do they misunderstand that they can use it more than once, they also think that zero money down means zero money out of pocket. And it is important that they're working with a good agent, somebody that understands that we still need to take care of closing costs, whether that's through an assistance program or negotiating it into the contract. Because sometimes the veterans think that, oh, I have to come out of pocket no money with my VA. Well, that's only true if we negotiate the contract and get the closing cost covered somehow.
Right, right, right. And this particular um, meeting, you know, it applies generally to VA all over the country, But I kind of want to focus in on Tampa and say that, Tampa is a big military area because we've got MacDill Air Force Base. So we've got a lot of veterans. So the good thing is that the VA loan is really active here in this particular market. So you can do a lot with it. But also, these veterans here in Tampa really need to know what their VA can do for them because unfortunately, if they don't use it, then it's like it's wasted. And yet it's a great benefit. And so we really definitely want to let you guys know what it is. So here's the nice thing is, like Ron was saying with VA, as far as zero down, you will need to get closing costs taken care of, things like that. You will still need money for inspections, things like that. But when you're dealing here in Tampa, because there are so many VAs or veterans, right? Then they're going to be more willing to deal with us in closing costs if we need assistance on that or we want assistance on that. They're going to understand the VA benefits better, the loan product better. And guess what? Because there are so many veterans, there are a lot more assumable loans here. Now, one thing that's interesting is, and correct me if I'm wrong, Ron, but aren't VA loans even assumable by regular people or no?
Yeah, a VA loan is assumable and it can be assumed by a veteran or a non-veteran. I've got mixed opinions on assumability because it could be really attractive to the buyer. However, you got to remember that you're only assuming the balance on that loan. So if somebody's owned their home for 3, 4, 5 years and it's been appreciating, they might have a $300,000 balance on a $500,000 sale. So the person assuming it is going to get that amazing rate, but only on that $300,000 balance. So they do have to figure out how to cover the difference. And as the seller, if I'm letting somebody assume it, I need to realize that I'm tying up my entitlement with that house and I'm leaving it at the mercy of that person's payments and everything, unless it is another veteran that assumes my VA loan and we can do a swap of entitlement where they take over my entitlement. As the veteran seller, I would be a lot happier and feel a lot better about that situation if I was able to let the buyer assume my entitlement, or if I knew that I was about to go buy my last house and I wasn't really worried about it and I wasn't too concerned over my entitlement in the future, maybe not as big of a deal, but probably the biggest thing to remember on that is you got to make up the gap and it is tying up the seller's entitlement.
Mhm. Yeah, and speaking to that gap, which yeah, people don't really understand. What Ron's trying to say is that if there's $300,000 and the owner's trying to sell for 500, there's a $200,000 gap that we have to cover. Now, for many of you relocation people, you may be selling a house that you're having cash from. So if you have that cash, then you can still turn around and flip it into another 3% interest rate, right? Especially if you're coming from places like New York, LA, Chicago, all these places where it's more expensive coming from, and these are all places that are heavy coming into the Tampa market. Then you have an opportunity to get a much bigger house for a lot less money. And, technically, depending on, like we said, you have to see where that equity, how much equity you're trying to cover as a gap. So that's what makes it a great option. But there are always, as we said, those, as Ron was saying, those negative sides that we got to work through. Now, does that make it easy to find that deal? No, not necessarily, but that doesn't mean that deal doesn't exist, right? So, but if you don't know about it, then it certainly doesn't exist. And that's what this whole, podcast is about, is letting you guys know what all of your options, and then what's best, what will best work for you will work for you. Um, So, one thing that I thought was interesting that you mentioned, Ron, was about the entitlement. Can we talk about entitlement? Because I really think that that is that is something that's very misunderstood. And, even I, a lot of times, don't get it right. That's why I always come to you and say, isn't that right? Can we buy a second home or can we not? Or and how much can we buy? There's a lot of misconceptions with the VA loan because I mean there's somebody says that, oh well, I can buy unlimited on my VA. Well, is that true? Well, only I can only buy up to this amount. Is that true? What does entitlement, how does that work?
Sure. So when you get a VA loan, the VA is actually guaranteeing 25% of that. So if you're buying a $400,000 house, getting 100% financing, $400,000 VA loan, the VA is guaranteeing, insuring 25% of that. So $100,000 in that example. So your entitlement kind of controls how much house you're going to be able to buy. If you're buying a $600,000 house, you need $150,000 of coverage from the VA to be able to do that with no money down. So everybody has a certain amount of entitlement. When you have full entitlement, it's 25% of the current FHA loan limit, which is like a little over 830 right now. So it used to be that that's how much house I would have been able to buy. Okay, I could go buy a house for $830,000, no money down. But about 7 years ago, under the Blue Water Bill, which covered a lot of different things, they expanded the entitlement so that when a veteran has their full entitlement, they can now buy an unlimited price point. Meaning a veteran can go buy $1 million home, a $2 million home. We've done one as a company out in California. I think there was like 6 million, 8 million, with a VA loan with no money down. It's called a VA high balance or VA jumbo loan, but you have to have your full entitlement, and obviously you have to, credit qualify to be able to buy such a house. Now,
So,
go ahead.
so Ron, you're telling me that you sold a $6 million home in California?
Not me, not me. I've heard about it here in Tallahassee. We don't see that kind of stuff.
I need to go do real estate in LA. Okay. And so, but basically what you're saying, if I can get this right, is you're saying technically, if the veteran qualifies, then he can go buy no money down
Mhm.
on Tampa Bay and live next to all the rest of the multi-millionaires.
Yep. Yep. If they've got the income to qualify to go try to buy that kind of house, they can go get into it with no money down if they have full VA entitlement.
That's amazing.
It is
Well, then
amazing.
I just want to say this. When I sell you the home, you guys, then I'll move into the outhouse that's on Tampa Bay, and I'll live with you. I'll pay some of the lights and utilities, okay?
And by the way, we do those VA high balance loans. Not all lenders do. So when you get that buyer, make sure to send them to them.
That's awesome. Yeah, well, that's another example of what I talk about when I talk about using you is because you have all these products that are disposable. You're like a Swiss Army knife of lending products. And so yeah, that's great. Okay, cool.
Now that's full entitlement. So let's talk about extended entitlement. Let's say that somebody's moving here. They've been living in Texas and they had a $300,000 VA loan that they've already got in place there. They want to hang on to that house. They're going to turn it into a rental, whatever. And now they're moving into the Tampa area. Okay. Can they use VA again? Yes. Yes, they can. So if you've got about it's easier instead of talking entitlement numbers. To me, it's easier to talk about how much buying power do I have. So the loan limit is around 830,000. Let's just round down and say that. So if I have $300,000 of my buying power tied up back in Texas, I could come to Tampa and use the other 530,000 and go buy a $530,000 house with no money down. But let's say they want a $590,000 house. So, oh my goodness, that's $60,000 above my buying power. Remember, the VA is guaranteeing 25%. So they'll guarantee 25% of that first 530. If I exceeded it by 60,000, I just have to come up with 25% of that. Well, 25% of 60,000 is only what, $15,000? So you're telling me I can go buy almost a $600,000 house and I only need $15,000 down? No mortgage insurance, great interest rate. It's usually probably still going to be the best option unless you've really exceeded your buying power. But that's your extended entitlement. So to answer your earlier question, yes, you can buy multiple properties. And you said that, hey, I've heard some people say you can buy unlimited. Well, it's not unlimited because you only have so much entitlement, so much buying power. And you actually have to, when you use extended entitlement, have a minimum price and a minimum loan amount of $144,001. It's kind of an odd rule, but and I don't think you're going to have problems with that in Tampa, that people are finding lots of houses below 144,000 that they're wanting to jump on. I did have a buyer down in Central Florida, rural, a few years ago that found a house for like 135, and they were just so upset because they were using extended entitlement. They're like, "You mean I can't buy it because it's not expensive enough?" And I was like, "Well, yeah, that's kind of the rule." But what we did was we turned it into a VA renovation loan. We just did about $10,000 worth of stuff to the house that the buyer kind of wanted to do anyways, boosted it up from 135 to 145, and we closed her on that house. So by combining VA with renovation, we overcame that. But you can use extended entitlement, you can own multiple houses, but only up to a point.
Well, I like that story, Ron. That just kind of highlights what I was talking about earlier, is that you're part of the reason why I'm always able to get something done is because you are a problem solver, and together we problem solve. So it's not really I don't really consider myself a salesperson. I consider myself a problem solver. So
Amen.
any of you guys that are interested in, hearing more or knowing something specific, because these are all general things. We're trying to give you examples of either deals that we've been through or been a part of, or things that we know how to get done, just to give you an example of how to get things done and give you an idea. But we'll both be available for personal consultation. And like I said, Ron does deals all over the state of Florida. I do them in Tallahassee and Tampa and Orlando area mainly. But on that note, can you get a VA loan on like a mobile home?
Yes, you can get it on a manufactured home, double wide, single wide. Back to like the middle of 1976 is what you need them to be to do it. And that's for Fannie, Freddie, HUD, all those required. It's like June 30th, I think it was 1976, and that's all about because that's when HUD codes were first written in that required certain standards for manufactured homes. So you can do all your major lending products on those. Now USDA is a new for USD for manufactured homes, and they only go back 20 years. But VA and your main products go back to the middle of 1976, and we can do VA renovation on a double wide manufactured home. And if you have a first time buyer and then qualify for getting some assistance through Florida Housing, we can do that on manufactured homes as long as it was 1994 or newer. I'll give you some trivia on that one too, Jules. That has to do with HUD code again. In 1994 is when HUD redid their HUD code. It required wind load ratings on manufactured homes. So in the state of Florida, if a manufactured home is built in 1994 or after, it has either been rated for Wind Code 2 or Wind Code 3, depending where it's located in the state. So you're going to get better insurance on those, and that's why Florida Housing will allow you to work with 94 and newer. So we can do them with Florida Housing Assistance, we can do them with VA, we can do them with VA renovation.
Cool. Now let's talk a little bit more about this VA renovation. So that our people can kind of understand, a VA renovation loan would, let's say if a house after repair or ARV value, okay, would be, let's say 500,000, and the work that is needed is 400,000, or the work that is needed is 100,000, and we get the home for 400,000, let's say on the foreclosure market.
Yeah.
Then if I'm correct, the way that works is both the 300,000 plus the 100,000 would all be combined into one loan, and the work would get done before they actually move in, but you would be able to close on that home before closing. and then they would get the work done in 2 or 3 weeks, and then you'd move in, correct?
Yeah, and so in the renovation world, we do all kinds of reno loans. The FHA 203K is the best known, full or limited. There's Fannie Mae Home Style, Freddie Mac has a product, USDA has a product, and VA has the product. Now, a lot of lenders are very scaled back in their VA if they even still do them. And a lot of that is because Ginnie Mae now will not issue their guarantee. Remember that 25% guarantee? They won't do it until the work is done now. So they kind of make the lender hold a hedge. So a lot of lenders will only do 35,000 on VAs. That is not a VA rule. That some lenders will swear that that's the VA rule. The VA doesn't have that rule. When they wrote their circular, they were very general about it. But a lot of those limitations are in response to how they're handling that guarantee that Ginnie is. What we did is we said we won't do structural. We don't have a dollar limit, but we will only do stuff if the contractor says he can finish it in 90 days, within 90 days, so that we kind of shorten that hedge before they're willing to issue the guarantee. But $100,000 worth of work could absolutely be done within 90 days, depending on what it is. So it's always going to be purchase price plus renovations, put them together, $400,000 price, 100,000 in reno, 500,000 total. That's what the loan's being based on. So for VA, that's no money down. That's a $500,000 loan. We do need it to appraise as improved to cover that 500,000. All the work happens after closing, and you can move in. Like we don't preclude somebody from moving in just because the work's gonna be done after closing. Like I say, if the house I live in now, if I'm gonna have a new roof put on, I don't move out. I can be living in the house while the work's going on, depending on what it is, and that I'm on the same page with my contractor. But yeah, all the work happens after closing. It's wonderful for veterans, because sometimes they just want to change things on the house, or it might need a new roof, or things that would stop you from getting any kind of loan or getting insurance. But sometimes people are picky. The VA is a little pickier about certain things, and sometimes a seller might be resistant to selling to a veteran, unfortunately, and we can address those kind of things. Also, sometimes veterans might need handicap accommodations, stuff like that, and that can be rolled in. So there's just so many wonderful things that can be done with the VA renovation loan.
Yeah, that is one thing that I really love, that I think is a hidden secret about the VA, is that they do renovation loans, because a lot of VA contracts get denied. I'm talking about on the sales side, because the sellers feel like, oh God, I'm going to have to completely renovate my house in order to get this loan done. And it's just not true. But at the same time, I think when you have a good realtor who's been in thousands of homes, then when they walk in, they kind of already know, okay, this may or may not be an issue. This may or may not be an issue, so that we go into the transaction eyes wide open. And when we do, then we go in strategically with a plan and an idea on how to get things done. So from that standpoint, that's why I like that fact, because I can use that as in the back of my pocket as a tool of, hey, ooh, this is kind of major, and it came up in inspections that we didn't find, but hey, we can flip this to a renovation loan. And I think the nice thing is we don't have to switch lenders. We don't have to rerun credit kind of like that. We don't have to do any of that kind of stuff, because
Yep.
it's already done. So that's another. I really like the fact that there's a actual renovation loan product with the VA. Because I mentioned there's a lot of them, but VA in particular.
Yes, I think you bring up a great point in just having that as a backup, because sometimes we know what has to be addressed on the house and we can just go reno right out of the gate. But sometimes there's some nervousness, like, is this going to get flagged? Is it not going to get flagged? The seller has said they absolutely will not fix it. Being able to just tell that seller, listen, we're going to roll the dice. We're hoping this doesn't get flagged, but if it does get flagged, the lender that my customer is working with has this renovation product, and we're willing to go that route if we have to. That can ease the mind of that seller, just knowing that we have that in our pocket to address those things. I just thought of another cool story. You want to hear another cool story of where VA actually beat out conventional, Jules?
Yeah. I was about to tell you one.
All right, so check this one out. You asked me about manufactured homes. I had a customer that was a veteran that was just dying to buy this manufactured home up here on a nice piece of land and everything. And the seller just absolutely did not want to take their offer because it was VA, and they had a another offer coming in. Wasn't as good of an offer. It was for less, but it was conventional, and so they were convinced, well, this is gonna be easier because it's conventional, and VA is such a pain. I took a good look at the pictures of that house, and I picked up the phone and I called the listing agent. And I said, hey, and you've got my pre-qual letter for this veteran wanting to buy the house. I understand you're leaning towards taking this conventional offer. And they said, yep. I said, so I guess you don't mind having to have an engineer come out to the house and do an engineer's report and all the problems that are going to come with that. And she's like, well, what do you mean? I said, well, Fannie and Freddie have a rule on manufactured homes. If you've done an addition to the home, which you have, I'm looking at it. I'm looking at this big old porch you did. You got a new roof coming off of it. It's leaning up on your roof of your manufactured home. Fannie and Freddie are going to call for an engineer, and you're going to have problems because I can see you don't have supports. It's leaning. It's supported partially by your roof. VA doesn't have that. So I guess you could go that route and deal with the engineer and deal with fixing that roof instead of taking my VA loan that's not going to have that. The next day we were under contract on the VA and we were moving forward because VA was less problematic than conventional on that particular deal.
That's awesome. That's
Yeah.
awesome. What's funny is I remember in my very, very early days of real estate, this probably was in my year one. And this uh, I'm not sure if we were working on that deal or not, but it's so funny because literally 2 days before closing, because the appraiser came out and there was wood rot on the deck, and the deck was attached to the house. Well, the deck, he said, had to go. So literally, I was out there with a chainsaw and everything, trying to get that thing removed. It's funny, Ron. People ask me, what does a realtor actually do? I said, well, it depends on what day. Some days I'm a plumber. Some days I'm a contractor. Some days
Right.
I'm just driving around.
Mhm.
Oh, um, so I wanted to move on to, because I think we took care of entitlement. I think people have a good understanding of that, hopefully. And if you need more understanding in your particular, um, you know, because everybody's deal, that's one thing I love about real estate. Everybody's deal is different. I think that's what Ron likes is that out of all of his transactions, not one of them has been the same. There have been similarities, but not one of them is the same because it's a different person, different credit, different situation, different income. It's all individual. And so as much as we tell you, you'll still need to get that personal kind of consultation on your own particular situation. And as I always tell people, be honest with us. We're like attorneys. We do have confidentiality, so and we're not being nosy. Uh we're I say we're giving you our real estate brain, but our real estate brain only functions on the knowledge that you give us, if that makes sense. Okay. Um, but one thing I wanted to talk about is I wanted to talk about DTI and how that kind of works with the VA. And let's kind of talk. What actually let's go into I want to go into house hacking because that's my favorite part. Okay. And for those of you guys that don't know what house hacking is, it's essentially where you buy multifamily property. I myself am an investor, and also I do commercial real estate too, and I do a lot of triplex, duplexes, and quadruplexes. Um, and you can actually do that with the VA. You don't have to just buy a single family residential dwelling. You can buy a duplex, triplex, or a quadruplex. That's considered residential. So, can you talk a little bit about that?
Sure. Well, and you mentioned two things, and I'm actually going to talk about both of them because they kind of play in together, Jules. You asked about debt to income ratio,
Mm.
and it is a little different with VA. Like on an FHA loan, debt to income ratio caps at 57%. That's total debt to income. For people that know nothing about mortgages, if you take your house payment, including taxes, insurance, all of that, and divide it by your gross income, that's your housing ratio. If you take your house payment plus your car payment, your credit cards, all your other debt, divide that by your gross monthly income, that's your total debt ratio. So FHA, you can stretch that up to like 57%. That's pretty good. Not all lenders will go that high. Some of them will cap that at 50% as like an overlay. Conventional is going to cap at like 50%. USDA is very strict on debt ratios. It's hard to get up there. I've gotten VA loans done with 60%, 65%, 70 something percent, pushing up into the mid to upper 70s. And here's why, because they don't just look at debt ratios, they look at something called residual income. And when you get into those higher debt ratios, Jules, it's usually like your higher earners. And think about it. If somebody's at a 60% debt ratio and they make $5,000 a month, that means $3,000 of their income is already committed to debt. So what do they have left over? $2,000. Okay. But what if somebody makes $20,000 a month and they're at a 60% debt ratio? They've got 12,000 tied up, but they still have $8,000. Residual income, what's left over after you're addressing your debt. So VA recognizes that not everybody is equal on debt ratios. As you become a higher earner, you can absorb higher debt ratios. And some of your lowest fallout rates for foreclosures and stuff is VA lending. So it's not that, oh, they're irresponsible and this isn't working. It does work. It's a valid way of looking at the customer. Well, I'm going to spill debt to income ratios over into multifamily, because one of the great things when you're buying a multifamily, and this is true for FHA and for VA, we can count rents from the units you're not going to live in. You have to live in one of those units. It's owner occupied only. But let's say I'm buying a quad. My 3 neighbors can be helping me pay my mortgage, the rents. FHA, it's a little more straightforward. You just get to count the rents. Although when you get into 3 and 4 units, there's a sustainability test that can be tricky on FHA, but we'll stick to VA. On VA, the biggest thing is if I want to count those rents, I need some landlord experience if I'm going to count those rents, or I may need some reserves to count those rents. But the nice thing is, in order to satisfy the property management experience, I can hire a property management company to cover that stuff for me. And now I get to count the rent. So if the rents are 2,000 a piece for the other units, and I'm already only getting to count 75%, so I'm at 1,500, but then I'm hiring a property management company that's going to maybe take 10%, that's coming off too. I might only get to count, 1,300 some odd dollars per unit, but still times 3, that's almost $4,000 of extra income that's helping me qualify to buy that quad, and, doing those numbers real quick. So that's very helpful. And it's probably smart for you to have a property management company involved at first anyways, to make sure you're handling everything correctly. I know some people that do property management, right, Jules?
Yeah, yeah.
Yeah,
As you
so
know, yes, I do a little some of everything. Maybe a little
yeah,
bit of
I know a guy. I know a guy. So yeah, it's fantastic for house hacking. It's fantastic that you can go get a multifamily, and because you can use your VA over and over. Man, if I'm a younger first time buyer using my VA and I'm willing to go live in a quad for a couple years, that's great. And now I can use my entitlement again to move on from that thing and go get a single family home. And now I've got a quad that I got under wonderful terms, getting all this rent, and I use my VA again and go buy the next house. And so yeah, if you're smart with it, you can do some cool things.
Yeah, and what a lot of people really don't realize is the beautiful thing is if you do it that way, then you've dipped your toes into real estate investing. And if you don't like it, you're not so deep into it that you can't get out. Does that make sense? And the cool thing that I think about it this way, is if you take, $4,000 a month of income that is coming off of a quad, and you times that out by roughly 12, then you're talking about, 30, $40,000, whatever. Well, that just literally from that's like you signing on the piece of paperwork, and you've now increased your net worth by that much, and you've also increased your income, and it's almost like you bought yourself another part-time job, or full-time job for some people, without very little effort. If you think about it this way too, which is cool, is if 3 of the units are actually paying and taking care of the mortgage, then you've effectively negated your biggest bill, which is usually your rent or your mortgage. So you're not paying that. And so now you have all this extra income, so it's just a very great tool. And you're getting into it. You can still get a multifamily, right? Correct. With no money down.
Oh yeah, yeah. Still zero down. Still using your VA zero down when you do the multifamily.
Right. But
And just in general, I mean, golly, when I see a veteran that doesn't own a house, I think to myself, what are you doing? Why would you continue renting? Just in
right.
general, when I'm talking to people about the value of owning a house, Jules, there was a study done, I think it's 2024 out of the Aspen Institute that the median net worth of renters in the United States is around like $10,400. It was at that time. For a homeowner, it's like $400,000. Why would
Right.
you not own a home when the barrier to that entry is so easy for a
Mhm.
veteran that has the ability to go in with no money down, more generous on credit score, things like that. It just the things that would stop you from becoming a homeowner are very minimal for our veterans. And go get started. Go start accumulating wealth. Go get going on these things. I always say get in the game. Get in the game, and there's no excuse for our veterans to not get in the game.
Yeah, yeah, yeah. Yeah, I totally agree. I mean, it's just such a everybody talks about wealth building, but
Mhm.
at the end of the day, veterans have a huge, massive advantage and tool that's in their tool belt. If they were Batman, I mean, they'd be using that's the grappling hook, they'd be using that all the time.
Yep.
And so it's time for them to use it. Another thing I wanted to kind of talk about, can you talk about the VA disability funding fee exemption?
Sure. So in lending, it's all about risk mitigation, risk management. That's why on a conventional loan, you have to put 20% down if you don't want to pay monthly mortgage insurance. That's why FHA is going to hit you with mortgage insurance, not only on the monthly payment, but up front mortgage insurance that they're going to tack onto your loan at the front. So the VA has to do something to mitigate risk. I mean, it sounds miraculous. No money down, no mortgage insurance. So they do have what's called a funding fee. The first time use is just over 2% if you're putting no money down. Once you've done it that first time, it jumps to over 3% if you do no money down. You can put some money down to lessen it, like 5% down. Or a lot of our veterans get a waiver on it where they don't have to cover the VA funding fee. If you have a VA disability rating at a minimum 10% or greater, you are exempt from that VA funding fee. If you are a Purple Heart recipient, that is a new thing. You are exempt from the VA funding fee. That's kind of cool. If you are in the middle of trying to get your exemption rating and it comes through after you've closed on the house and you had to already come up with that, you can actually work on getting a refund of that VA funding fee. So yeah, that disability rating is a huge thing. If you're 100% VA disabled, I mean there's huge things to think about on what that does for your taxes, as well as it's a monthly income stream, a non-taxed one, and it does eliminate this VA funding fee.
Yeah, yeah. Unfortunately, or fortunately, I unfortunately my dad is also a disabled vet.
Mhm.
And yeah, so there, like you said, on his taxes, he's able to get, a bit of a discount there for his homestead.
Mhm.
And same with that funding fee. So I kind of wanted to talk about that because, there are a lot of our disabled vets out there. So, I mean, not that we'd rather you be healthy, but at the same time, I mean,
Mhm.
we want you to get your full benefits, if that makes
Yep.
sense. Um, Okay, well, great. Another thing I wanted to talk about, Ron, is some eh, I think what a lot of people don't really realize is just because you qualify for a mortgage doesn't mean that you qualify for the house. Or in other words, what I mean is depending on what loan product means that the house has to qualify. Like you have to qualify and the house has to qualify, and both together when that comes together, then the deal can be done. So from that standpoint, does VA have any limits on location? Because some other loan products have limits on location, like USDA does.
Mhm. No, so VA can be anywhere. Now there's some states where you get into like leasehold land and stuff like that, but that in the majority of Florida, that's not a thing. So there shouldn't really be location limitations, especially in your area. Around Tampa, around Tallahassee, where you mostly do business. The home does have to meet certain criteria as far as the condition that it's in. Which is true for conventional, which is true for FHA. They might be a little more stringent. The VA has loosened up on some things. I'll give you an example. In May, they made a change in VA guidelines regarding outbuildings. It used to be a big deal, with your outbuildings and stuff, that they also had to meet MPA's minimum property, MPR's minimum property requirements. Now they don't, unless they are a health and safety issue, like they're dilapidated and they're really causing problems. If the paint was put on, like the buildings are older than 1978, they can make an assumption that there's perhaps lead-based paint if you have chipping peeling paint on the main building, that no longer are they supposed to do that on the outbuildings if they have chipping peeling paint. So you're getting some relief on some of the stuff that used to cause headaches with VA, which is nice. Also, you have to get a WDO, and get a clear WDO, which we can solve with renovation if that's a problem, or the seller can address it. I also recommend ordering a WDI instead of a WDO if you want to make it easier to pass. What's the difference? WDO is a wood destroying organisms report that includes termites, powder post beetles, includes wood destroying fungus, wood rot. WDI, wood destroying insects, is still going to be your powder post beetles, your termites, all that, but it eliminates the fungus. So they're not going around with a screwdriver poking and looking for little pieces of wood rot everywhere. It's not a get out of jail free card, because if there's obvious wood rot, there's going to be pictures of it in the appraisal, things like that. But hidden nitpicky wood rot sometimes can mess up a VA deal. But if you go WDI, you can eliminate some of that. Another thing that'll come up is if you're on a well, that the water has to be tested, make sure it's potable, clean, acceptable water. You got to get a well water quality test done, but it is very rare that those don't pass, especially, if you come back and shock the well. Usually that's not a big deal, but yeah, the property does have to meet certain conditions. There's some stigmas about it, but it's getting easier and easier to pass that and not be an issue. Hopefully, with VA being so prevalent in the Tampa market, Jules, a lot of the listing agents and stuff down there are not as resistant to it. But if that's one reason we should always be educating people, consumers, and other agents, so that our veterans don't get shut out of homes that they're interested in, but just simply because of some good condition things that are easy to overcome.
Yeah, and it's just a shame when veterans get negatively impacted because they're trying to use their benefit. I mean, if we can close the deal, let's close the deal and let's
Yep.
do it for our veteran. And that's just my opinion. But yeah, those are definitely some good points there. Things that we can do, as agents when helping our clients. One thing is I do like an appraisal gap uh option, when people are afraid of appraisal. Now, of course, when I do something like that, I make sure that the comps look really good to do it, but you should offer quick inspection periods, but the only reason why you would offer a quick inspection period is if you have the confidence in your lender being able to still get this done. You know, Speaking to that, Ron, do you offer any, cross qualification letters, or something like that, that would also help?
A pre-qualification letter for the veteran for the VA loan, you're saying?
Yeah, but I'm also saying, um, I would look at it as if we could do, let's say, qualified for VA regular and qualified for renovation, then what that does is that allows me to go in there with more power. Look, we're gonna buy the house.
Oh,
Okay,
sure.
he's
Yeah.
qualified. Okay, we can do it this way, we can do it that way.
Yeah, we could issue letters to cover both scenarios. If that was important to a seller, of course, we would do that. That wouldn't be an issue.
Mhm. And so, what is the time frame? Let's say that we get a house under contract. what is the time frame that you think that you could reasonably, on average, close a VA loan?
I mean, if the veteran is being responsive and getting us all their paperwork and all that stuff, usually the VA appraisal is going to be what dictates how fast we can close, because I mean, we'll have them credit underwritten within the first 48 hours and know what we need. So as fast as the title company can get us title and as fast as we can get that appraisal back, I mean, we can close them in a couple of weeks. You know, that definitely inside 30 days. A VA renovation loan is going to depend on how fast we get the bid, because the difference there is we don't order the appraisal till we have the bid. So if it takes somebody 2 weeks, 3 weeks, 4 weeks to get me a bid, and we're just now ordering the appraisal, you might be looking at a 45, 60-day turn time. But on a standard VA, I mean, 2 to 3 weeks usually is not a problem.
Wow, that's impressive. A lot of people I think really would be thinking 45 to 60 days out, so that's a great timeline. And if we're talking about 2 to 3 weeks, I mean, most cash deals, if you were going up against a cash offer, it's going to be at least 2 to 3 weeks. Usually it's a month. So that's just for people to really kind of understand how the market really goes. As far as building with VA, can I do a construction to perm with VA?
You can. I don't do VA construction loans. I've got some good folks that do them. We may pick that up. That sometime next year that answer may change, but right now I don't do VA construction. But yes, you can build a house from the ground up using a VA construction loan. There's some different nuances there, such as usually on a construction loan, the buyer who's having the home built has to pay interest on the amount that they have drawn during the construction period before it turns into the perm loan, the permanent loan. VA doesn't allow that, so the veteran can't be made to make payments along the way until the house is finished. So there has to be some calculations done to get that built into the numbers so that the interest can be paid on behalf of the veteran. So there's some different nuances, but yeah, you can do a zero down VA construction loan and build from scratch too.
Wow. And so during the construction period, most loans would require the buyer to be paying on that
Yep.
until
Okay.
until it closes.
Mhm.
And so that's there again is another benefit with VA. Let's get into another scenario. And this kind of particularly probably belongs more to me personally, but I'll put it out there, right? I want to build, and we kind of talked earlier a week ago about it, using my dad's VA, is it possible for us to, you know, buy a piece of land down here, get it built, and then finance it just before closing with the VA?
Well, so you can, when you're trying to build a house, you can do what's called an end loan or you can do a construction loan. I call it the builder's either building it on his own dime or he's building it on your dime. So if the builder needs to build it on your dime, you got to go get a construction loan, whether that's conventional, VA, whatever, you have to go get the funding and he's going to use it to build the house. Or the builder, and you see this with your big builders where you drive into a subdivision and there's you got your model home and there's all these houses. Well, that's where they're building it on their own dime. And then at the end, you're just buying it from the builder. And now you can use FHA, conventional VA, whatever you want. So yeah, it depends on the builder. And if the builder is willing to build it on their own dime, then yeah, at the end you can just do the end loan and purchase it with your VA.
Gotcha. Now, can you, let's say the veteran themselves don't have a lot of income or as much income as they once had because they just recently retired.
Mhm.
So how can we overcome something like that? And scenario is that they want to move down to the Tampa area, and do we quit our job first or do we not? Or how would that work? What is your best thought process in that.
Well, when you're moving, the income has to make sense. Like if I work a job where I live now and I'm clearly having to quit that job because I can't commute and I'm moving to a different area, the lender's not going to give you credit for that income upon moving and declaring a primary residence where you're moving to. So, you either have to have some income that's following you, whether that's fixed income or whether that's a new job, whether that's working remotely on the job you've had. So your income is going to have limitations on debt to income ratio as to how much house you can qualify to buy. Now, one of the ways we overcome debt to income ratios in the mortgage world is with a cosigner. And like FHA loans, cosigner, you can do it with conventional loans. We're in a college town here, Florida State, Florida A&M. And so we will see a lot of that where we call them kitty condo loans, where the parents are co-signing and helping the kids buy a house. And you can do that. The buyer doesn't even have to have a job. That is the strength of the co-signer. Here's where it gets tricky with VA. Your co-borrower to do 100% VA financing is only allowed to be a spouse. So I've seen people literally that were engaged that went to the courthouse and got married ahead of time, didn't tell everybody, still did their wedding, but they got legally married so they could qualify for the VA loan, ahead of time. But you can use a non-spouse to co-borrow with you. The math gets a little tricky. Like let's say I've got my child or whoever that's gonna co-borrow with me on my VA loan. Now I'm 50%, they're 50%. The VA is covering 25% of my 50%. My co-borrower has to cover 25% of their 50%. So that becomes a 12.5% down loan. So now if I'm buying a $500,000 house, I got to come up with 12.5% of that as a down payment. And the lender has to send that off to the VA to be looked at directly by the VA instead of just underwritten by the lender that's handling the loan. So you can use a cosigner who is not the spouse, but the math gets a little tricky and the VA has to take a look at it.
So on VA, we could do, so the scenario is that and I think a lot of people as their parents are getting older, they're doing things like these kind of family compounds if they can. So is there a way to do, let's say, because when you're building, generally you have to buy the land. Can you wrap that land in the loan as well?
Well, if you're doing a VA construction loan, on a construction loan, your first draw can be for the land. So usually when people are wanting to do a custom build and get land, they either go out and get a land loan first and secure the land and then get their construction loan, or they've already got their construction loan put together. So the first draw of the construction loan is for the land. So it just depends. If you've secured the land with a land loan and now you're doing the construction loan, you can take whatever equity you built into that land through down payment or whatever up into the construction loan as part of your down payment. So there's some different nuances there. That's gonna, I mean, we'd have to do a deep dive to, for each scenario to look at that.
Okay. Well, you know who I'll call. Well, listen, I think that'll kind of wrap it up. Is there any other final comments that you have about VA?
I do. I want to mention something because we're in the state of Florida. A lot of veterans will go to a lender based on the name of the lender. It's veteran this or military that or Navy this, Air Force that, and don't assume based off the name of a lender that they are the premier expert on VA lending. I always say if you're going to do a construction loan, work with somebody that does a lot of construction. If you're doing a reno loan, work with somebody that does a lot of it. If you're doing a first-time buyer program, work with somebody that does a lot of it. Don't be the practice dummy for the loan officer you're working with, and that includes VA. Work with somebody that really knows VA, understands what they're doing, and there is an advantage to you working with lenders in the state of Florida because I'm going to tell you about a program with Florida Housing that doesn't always have funding, but it does right now, and that is the Hometown Heroes program. A lot of times we think of hometown heroes as our fire, our police, our nurses, and that's true. But Jules, a veteran is eligible for Hometown Heroes just by being a veteran. And
Okay.
they have to have a full-time job at a Florida-based employment. I'm not a big fan of that rule, but that's what the legislature put in place, which means like if I'm just 100% disabled, I can't go take advantage of Hometown Heroes unless I'm working full-time. But if I am working full-time, I can go get Hometown Heroes on a $500,000 house, $500,000 loan. Jules, that's $25,000. I'm getting
Right.
5% of my loan amount interest-free to help me as a veteran. If you're working with an out-of-state lender, a national lender that's not present in the state of Florida, you're never even going to hear about that.
Right.
And I'm going to tell you something else cool about Florida housing, including their Hometown Heroes. They have a veterans waiver, meaning I don't even have to be a first-time buyer. As long as I've never used Florida housing before, I can go get that. I can even own another house, one house as a veteran, and use Hometown Heroes to go buy another house through their veterans waiver. Use a lender that knows about these things, that is hooked up with Florida housing, that understands VA. Make sure you're getting a thorough explanation, thorough examination, and that the person you're working with on the realtor side, on the lender side, really knows this stuff, and that you don't miss out on things that could have helped you because of stuff just slipping through the cracks. So one last quick example. We have a customer we just went live with in the last couple of days, Jules. A realtor reached out in her agency asking, hey, who can help me with a veteran? 3 different agents on a group text in her office said, go use this guy. And so she calls me on a weekend. I'm driving my car to my son's tennis tournament, start talking to her. Within a few minutes, I had the customer looped in. I had another loan officer off my team looped in. We had that customer pre-qualified that day. They had been working with another loan officer they weren't happy with the communication with for 6 months. And that person never told them about Hometown Heroes. They're under contract. We're getting them about $17,000 of 0% interest assistance through Hometown Heroes. They never would have seen it had they tried to stick to the road they were on with a loan officer of 6 months that never even mentioned it to them. Know who you're working with, and God bless our veterans. Thank you for getting this information out there, Jules. I, I'm proud to work with veterans. I take it very seriously, helping folks and trying to make homeownership happen. And if anyone has any questions, my phone number 850-228-5125. You can reach out just if you're looking for advice, information, questions. We'd love to help you. Thank you for having me on today.
Yeah. Ron, I really do appreciate you coming on. What's funny is, oh, by the way, the link to his site and being able to apply is in the link below, as well as his phone number and his email, um, as well as all of my contact info. I think you really made something. I really like where you said, deal with somebody local, because the reality is most people don't understand real estate is a local business. Okay. It is very, very local. If that person doesn't understand the market, doesn't know it, you're going to miss something. And the biggest cost in real estate or anything is ignorance, not knowing. I mean, think about all the things we've just talked about. We've talked about hometown heroes that you can still participate in. We've talked about no money down. We've talked about house hacking. We've talked about assumable. We've run the gambit. I think we've exhausted this topic. And yet there's more hacks that we can do and help you with, depending on your situation. But some of those are particular to location and knowing the things that happen in this location. So yeah, I mean, Ron, I can't speak enough about you. You do a wonderful job. It's funny even how I found you 18 years ago. And I'll give a shout out to my girl Susan Ice. My first year in real estate, and I was struggling with a deal, and it was not going to close, but I'm not one to give up. And she was like, "Oh, it's not going to. Oh, don't worry. I got you. Just call Ron Byrom." So, I don't really struggle with deals anymore because I call Ron Byrom. You know what I mean? But yeah, Ron, I appreciate your time today. And of course, as always, we'll talk about the deals that we got going on But I really do appreciate your time on VA, and we'll get together maybe next week and talk more on like FHA or conventional or USDA, or maybe we'll just talk strictly on renovation products and really do a deep dive into that, because we kind of touched on the surface on those, but we really want to definitely give the people the information that will help them to get to the house of their dreams, and their goals. So thanks again, Ron. I appreciate it. And there again, this is Living in Tampa Real Estate, and go Knowles.
Thanks, Jules.
Thanks.